Let's continue our look at the debt ceiling with a view of what the market experts are anticipating. Chicago Fed President Austin Goolsbee says the timing couldn't be worse. Here's what he had to say.
This whole, I don't even know what we would call it, the argument about the debt ceiling comes at the worst possible time, where we're trying to figure out what is a very strange business cycle coming out of the pandemic, weighing off against the tightening that's coming from these bank failures and uncertainty.
Rigmarole might have been the word that he was looking for, but joining us now to chat about the market action and the market reaction is Yahoo Finance's Josh Schafer. Josh, what do we know so far about what the market is anticipating here?
Yeah, Brad, I mean, you guys were just talking with Rick Newman about this as far as the debt ceiling isn't something everyone loves to talk about, but we talk about it because it has impacted stocks in the past, and people are starting to project that it will impact stocks this time around. So Bank of America was out saying that most often when we get into one of these debt ceiling standoffs, you don't see movements in markets until about 2 weeks from that X date. The X date is the date that Treasury Secretary Janet Yellen just highlighted recently as potentially June 1st. So then when you think 2 weeks out, that's next week. They think that things might start to weigh on the markets a little bit. Bank of America predicted that you could see some volatility just in the broader market, and then also higher borrowing rates might come through. Now, something that's interesting to point out when we think about this version of the debt ceiling crisis is basically people are comparing it to 2011 a lot. And when you take a look at 2011 and what happened to the S&P 500 in 2011, the story is similar for the start of 2023. So in 2011, we had a rally to start the year. Then the debt ceiling drama starts. And what happened to the S&P 500 in 2011? All those gains were erased. Not only were all those gains erased, look at that, the market was down more than 10% at one point. And so the fear is if this were to get extended out into the summer, and if there was more long-term concerns, we could see the market go down a bit. Evercore ISI specifically highlighting they think the S&P 500 might test 3,800 again before this gets resolved. That's about a 10%, between 5 to 10% decline of the S&P 500 from where we stand right now, and would probably erase those gains.
Wow. Yeah, so that really puts a fine point on why this is important.
Right. It matters to your portfolio, at least in the short term, most likely.
Yeah, definitely. All right, thanks, Josh. Appreciate it.